y'all feel out there?
I'm light years, call me eons. When the snare kick in, the beat is neon. Lights, yeah, I'm feeling magnificent. Care less what I'm up against.
Hello YouTube, thank you for stopping by. It's your girl Yandy. Please don't forget to subscribe, like, comment, and share this video for the support. Thank you for my subscribers and thank you for the newcomers. We welcome you on this channel. If you have not subscribed yet, here's your chance to do it, because every week we are dropping different videos on information that I think is transformational. I believe will just be able to transform your life, especially now we are doing a series on being a first-time homeowner. I shared my experience when I was able to purchase a home for like $2,500, being qualified for a grant, and there are different grants out there that people just aren't aware of. So every week we're dropping drills, so please press the notification button so you know when we drop another video. So based on what we have been speaking on, I dropped a video on how I was able to purchase my house for $2,500. I also dropped a video on like the do's and don'ts of insurance claim. But now I have gotten a lot of questions regarding how do I get qualified for a mortgage. So this video is really just going to go into that. How do you get qualified for a mortgage? And this is based on my experience and my research. I was also able to help a couple of my friends to become first-time homeowners, one last year and one this year as well. And I'm still working on a couple of other friends, because I'm that type of person. I push people to be excellent because I know that's what we're capable of. So first thing first, when you are looking to purchase a house, you want to look at your credit. Your credit is really, really important because it determines if you get qualified for the mortgage, one, or it determines what type of interest rate you are going to pay once you get your mortgage. I would recommend looking at your credit and trying to see if it's at 640 or above. If it's there, you're good. But if it's not there, you want to make sure that you work on there and trying to build your credit and push it to 640 or above. Once you work on your credit, you want to then look at your work history. If you have been at a job for 2 years, you are good. If you have been in the same field for 2 years, you are good. But if you just started a job that is totally different from what you used to do, it might be a challenge to get you qualified for a mortgage. Now, there are some scenarios that to look at. If you have been, let's say you have been working as a customer service for like 2-3 years, but you was going to nursing school and you finally finished nursing school and now you are working in the field that you went to school in, they may look at that differently. So each situation is different, but I would tell you rule of thumb is 2 years. 2 years at the same job or 2 years in the same field. Now, when it comes to these 2 years, what they're going to look at is your income tax for the past 2 years, and they're going to take the average income from your income tax. If 3 years ago, when you filed for your income tax, you made $50,000. Last year, when you filed for your income tax, you made $40,000. They're going to take the average and they're going to say you make $45,000. That's how they're going to do it. So I would tell you, for the self-employed folks and for the folks who does Uber, Lyft, who's self-employed or who is 1099, who use 1099, when you are filing for your taxes and you know you are ready to purchase a home, please do not use all the expenses that we normally put in our income tax so we can get a higher return. Because you want to show them that you are making enough money to get qualified for this mortgage. Remember, if you're looking to purchase a home for 2 years of income tax, they're going to look at that 2 year, and I want you to make sure if you are planning on purchasing a house next year, be careful how you file for your income tax in January, February, or March. And look at also your income tax that you filed this year to compare, to make sure that at least you can get qualified for a decent amount. So how do they determine what you qualify for is really based on your debt to income ratio. And how they do it is this. If you are making $5,000 a month and your other bills that are on your credit, it could be car, it could be student loans, it could be credit cards, whatever bill that is on your credit, that's what they're going to look at. So your debt to income ratio typically for a mortgage cannot exceed 43%. That means what you pay now on a monthly basis that is on your credit and your potential new mortgage together cannot exceed 43% of your monthly income. So if you're making, let's do this math, if you are making $5,000 a month, you're going to times that by 43.43, that's 43%. That is $2,150. So now let's say you have a car note, you have a couple of credit cards, and you have a student loan that has a total of $550 a month on your credit. So what they're going to do, they're going to minus that $550, and now that new total of $1,600 is what you will be qualified for as a mortgage. So they'll tell you, okay, you can qualify for whatever that amount is that's going to lead you to pay $1,600, and they're not going to budge. So if you have a lot of stuff on your credit, while you're repairing your credit, pay them off, remove debt. So if you have a lot of credit card debt and all those minimum payment, remove them, because they're going to count against you. If you purchase a car and you're about to finish paying it off, great. You don't want to have nothing on your credit, because you do need credit. You need at least 3 line of credit. It could be any 3, but they're going to ask you for 3. So you don't have to pay everything off, but at least clean up your credit. Clean up your credit so you be qualified for the max. So now once you fix your credit, once you figure out your job and figure out if you're going to be qualified based on your work experience, now saving. You want to make sure you have enough savings. Now, if this is your first time purchasing a home, you most likely can be qualified for FHA that require a 3.5% down. So let's just do the math. For FHA loan, 3.5% of $250,000, that is $8,750. That is going to be your down payment. 3.5%. Now, closing costs can be anywhere from 2 to 4% of the total payment. So 2 to 4%. So I'm going to push it up to 4%, guys. So 250,000 times 4%, that's $10,000. So take that 10,000 plus 7, that's $18,750 for an FHA with 3.5% down with an estimate of 4% closing costs. So that means you have to save. You have to have some decent money. However, yes, it's always good to save. You want to go in there thinking like, I'm not going to get qualified for nothing. Let me make sure that I have this money available. So when they say, hey, do you have it? Let me see your bank account. Bam, and you show it. So, however, there are grants that you may be eligible for. If this is your first time purchasing a home, there are first time home buyer grant. There are purchase assisted program that's out there. It's like city grants that are available for people to move into the city, into that particular city. So once you meet with your realtor, your broker, and you show them all of this, you also want to inquire about grants to see if you can get qualified for any grants that can offset this amount that you have to come up with. Remind you, when I said I bought my house for $2,500, $2,536 to be exact, I did that because I was qualified for a grant, and I also was able to get a seller credit. So there's different things that you can look into to see if you can lower that amount. So let's say now you meet with a mortgage broker and they look through everything, through your finances and everything, and they tell you you are pre-approved for X amount of money. So when you are pre-approved, this is like, hey, this is what you need to really start looking. Like, realtors don't really work with you until you really have a pre-approval letter, because how are they gonna know what properties to show you if they don't know what you're eligible for, or if you're even eligible, period. So when you get that pre-approval letter, that's when you can reach out to a realtor and let them know, hey, you're ready to purchase, you're ready to start looking. And now I have to tell you guys, right now, especially in certain states, the housing market is very dry. So please do not get mad at your realtor if they can't find you the house of your dream. It's because right now, I think we're going through a drought season for houses, because it's different in the housing market now. So I know you are excited, because normally that pre-approval letter is good for 3 months, 90 days. You want to make sure you start that process really quickly so you can find a house and close within 90 days. If that's not the case, let's say you got pre-approved and you didn't find a house, they're going to have to go do the process again. And you have to submit everything again, and they have to get your pre-approval again, and they're going to do it for another 90 days. And it goes and it goes and it goes until you find a house. I hope this information was helpful, guys. So I'm here to answer any questions that you have. I know this video is a little long, but it's worth watching, and I hope this information that I give you is helpful. And if you are ready to purchase a home, please contact a mortgage broker or a realtor to make sure that you are good to go and that you are qualified. I wish everybody that is looking to purchase a home get qualified, and I hope we all become homeowners really soon. And if you have any questions, please put them in the drop box. Comment, like, subscribe, and share, guys, to help me boost up this channel. Your support and love is truly, truly appreciated. I love you guys, and I wish you guys have a great day. Mwah, mwah, mwah. Bye.